So as I mentioned, those are people in the ideation phase, people who are, relatively young or new businesses, and then people who have established businesses. But you may be thinking, how do I get, what types of funding is available for me? We're talking about how to access finance. And, over the years in dealing with, different type of SMEs, I will address some of the challenges or the questions that you may have in your mind in this presentation today. So in terms of, broadly speaking, in terms of the types of funding for the first phase, which is those who are thinking of starting out their businesses, there's equity funds, which can come from angel investors. There's debt funds, which can come from those who will lend you, like banks, and you will have to repay over time. There's grants where you don't have to repay, but you'll be giving money, as seed capital for your business. And then there's obviously your savings, and then funding from, your friends, your family members, and your network. Broadly speaking, there are about 4 types of funding available to you if you're in that early phase of, either thinking of your idea or you've just started. So I'll go over it again. There's equity, there's debt, there's grants, and there's your own savings or money from your network, family and friends. Now, in terms of sources, for equity, I mentioned angel investors, grants, there are different agencies, some are government, some are private companies who provide grants, and then there are development agencies who also provide grants. Also, there are what we call business incubators and accelerators. We'll go into more detail about it in the following slides. And in terms of the kind of business strategy you should have at this stage, if you're just starting out or if you're just thinking about what to do, the very first thing you have to identify is, what problem am I solving? What is the challenge and what solution am I bringing to the table? So you have to be very clear about the solution you're bringing and who your target market is. Now, in terms of what lenders are looking for, there's something in banking that we call the 5 C's of credit. I will go over in more detail in the following slides. Now, in terms of financial hygiene, there's certain things that, and this is related to what lenders are looking for. There's certain things that anyone who wants to give you credit or who wants to give you money will feel comfortable when they see. And, it has to do with separating ourselves from our businesses. It has to do with corporate governance. It has to do with keeping your books and making sure that your financial statements are in place. So I don't want to, go over everything on this slide because this is a summary and we will still repeat it later on. So, but broadly speaking, that's how we will go through stage by stage for each category of business. So whether you are just starting out, you are thinking of an idea, or you are a young business, or you're an established business, so we'll look at the types of funding available to you, where you can get the funding, broadly speaking, the types of business strategy you should be using, and what I call financial hygiene, which speaks to the 5 C's of credit and the things that those who want to lend you money will be looking out for. So now going into a deep dive into those in the ideation phase, those who are just starting, those who have an idea, those who want to look for money to basically finance their idea. I mentioned earlier that the first thing is your savings. I mean, there's something we call in banking skin in the game. When you are starting a business, a banker will ask you, what's your own commitment to this project? The assumption is that you should have some equity and some skin in the game. And ideally, this should come from your savings. Hopefully, if you're passionate enough about the idea, you have saved up some money to be able to start up, and then you get assistance, from other people. Also, your network, your friends, your family, one primary source of funding. Then, secondly, the people who will provide you with equity. So long as you're able to sell your idea to them, it makes sense. They can see that it is a viable business plan or viable opportunity. They are called angel investors. These are people who are high net worth individuals who have disposable income and can invest. So they provide capital in exchange for equity, a stake in your business. There are also grants, as I mentioned earlier. These are provided by government and sometimes private institutions, foundations who basically identify different areas where they want to intervene, and they provide grants to small businesses, new businesses, to help them grow. There are also bilateral development agencies who sometimes may not provide you with cash, but they provide you with what is called technical assistance. So they can help you in terms of, they can pay for a service that ordinarily you would have paid for. So let's say you have a good idea, but you don't know how to write and document your business plan. They can step in and say, we will pay for a consultant to provide that service for you, but we will not give you cash. So bilateral agencies use those type of methods to support small and new businesses so that they can grow. And that's what I mean by technical assistance. And also, business incubators and accelerators do the same thing. So when the business incubators are people that help you to develop your idea from an idea to a proof of concept, whereby they actually test your idea and see whether it is a viable business and can begin to generate money. The accelerators, on the other hand, are people who help you to scale up. Your idea has been proved. We can all see that it is actually able to generate money or income or revenue, and they're now helping you to scale up. Sometimes they will give you some seed capital, and sometimes they'll give you technical assistance, as I mentioned earlier. And I'm sure on your mind, you are thinking, where can I get these people? The sources of funding in terms of angel and equity investors, there are very many out there, but one that I know that is functional and operational is the Lagos Angel Network. These are people, private individuals who come together, and they review proposals from businesses like yourselves, and, they then provide capital and fund those businesses in return for a stake in that business. In terms of grants, there are many institutions out there that provide grants. One very popular one is Tony Elumelu Foundation. They give up to $5,000 for people who have good ideas. And not only that, apart from providing the grant, they also provide, technical assistance. They provide you with mentors that can help you develop your business plan. And sometimes they even give you opportunities and platforms to display your business and to grow. I met a lady not too long ago. She makes sanitary towels that are reusable. And she got funding, I think her initial seed capital from Tony Elumelu Foundation. And they were able to sponsor her to, intra-Africa trade fair. And from there, she became very exposed. And now she's talking to partners outside Nigeria. They're funding her. And she's producing and expanding and, doing great things. And she's based, I think, somewhere in Benue State in Nigeria. So that's the benefit of, exposing yourself to institutions like Tony Elumelu Foundation. Faith Foundation also has some grants that they provide for the people who work with them. And there are many others, but these two I just selected because I'm aware of what they do and their track record. They have a strong track record. Now, in terms of bilateral agencies, there are very popular ones. There's USA, there's GIZ. GIZ is the German one. As I mentioned, they're all over Nigeria. They have different sectors in which they are, intervening. A lot of them are doing plenty work, a lot of work in agriculture and, different parts of the economy. Again, I would just encourage everyone to go over to their website. There are funds available from these institutions, and there's technical assistance available. And you might just be, lucky. Let me put the word out there, that they are actually new. They keep rolling out new projects. And so your business idea might just coincide or align with what, they're doing. So I would encourage everyone to go out and look for these organizations that I am mentioning. Now, in terms of business incubators, there are many, and a lot of them are sector focused, but I just wanted to mention Mest Africa, CC Hub, Google for Startups. And for a lot of these incubators and accelerators, what typically happens is that it is really at no cost, because they have a development focus in mind. So they will ask you to sign up, and help you. And some of them may come back and they will discuss the terms with you, but usually it is a little or no cost. So you just have to go and look for the one that meets, that has an alignment with what you are trying to do. Now, as I mentioned earlier, when you are starting out, the most important thing that you need to be aware of, or the most important thing that you need to do for yourself, is to identify the issues and then provide a solution. So you have to be very clear about what you are bringing to the table. You have to be very clear about who your target market is. That's the thing, that's the one favor that you have to do for your business when you are just starting out. And this involves, research, analysis, just to understand the market, what the market needs, what they want, what they like, and then, make sure that your solution is tied to the people that you are providing a service for. So going on, what are lenders looking for when they are lending to people who are just starting out? I will go over what we call the 5 C's of credit. You might have heard about it. The first one is character. And that's because, sometimes people are willing, let me say that again. Sometimes people, when their character issues can prevent people from repaying a loan. So you may actually have the capacity to repay, but if the character is not right, you may not repay a loan. So people will your lenders will look at your character, and this has to do with your credit history in essence. Again, capacity, when you want to get a loan from any financial institution or any lender, what they will look out for is your ability to repay that loan. And this speaks to the amount of debt you are taking on and the income that you are generating. So obviously, there has to be a match in that phase, because you can't, if you take on too much debt and you're not generating as much income, it will be difficult to repay that loan. So lenders will look at the income that you're generating, your revenue, and the debt. They'll match it with the debt that you are asking for so that you'll be able to repay the loan. Again, lenders will want collateral to secure their loan. So I will encourage everyone, even if you haven't started a business, whenever you have disposable income, please invest your income in fixed assets, in tangible things. If you can buy a plot of land wherever in Lagos or outside Lagos, keep it and use it, because it will be useful for you somewhere down the line. When people are wanting to lend money, whether it's formal, maybe from a banking, from the banking system, or it's informal from other sources. When you provide collateral, they're more comfortable and they will want to lend to you. In terms of the other two things are capital and condition. As I mentioned earlier, any lender will want to see your own commitment as an entrepreneur to the project. So you have to have capital and equity in the business as well. And then the conditions are the conditions under which lending is given. So the purpose of the loan, how much is being disbursed, the repayment period, whether there's a moratorium, the interest rates and things like that. Now, going on to what I call financial hygiene, and I see this a lot with MSMEs. Usually, entrepreneurs do not separate themselves, their personal lives from their business. Personally, when I come across an entrepreneur and they say, oh, pay me, and they give me their current account or their savings account, I already have an idea in my mind that this person has not started to practice what I will call financial hygiene or strong corporate governance. Ideally, your business should be separated from your personal account. And I'll tell you why this is important. Anybody who's going to lend to you will want to see your bank statements. They want to see your turnover. They want to see your cash flow. Now, if you've been sending money to your personal account, it will be difficult to prove and to justify to anybody who wants to lend you that you are qualified for that lending. Why? Because you don't have a current account, or you don't have an account that shows the transactions that your business does, or somehow you've mixed you haven't separated, let me put it that way, you haven't separated your business account from your personal account. So maybe when vendors want to pay you, you ask them to pay into your personal account. And then when it's time to aggregate everything, it becomes difficult. That's why it's important for you to maintain that discipline of making sure that your corporate account is separate from your personal account. Apart from the transactions, apart from making sure that the accounts are separate, the other thing that I will say is money that has been put aside, capital that has been put aside for your business, as much as possible should remain for your business. So when you have needs financially, try as much as possible not to dip into the money for your business and use it for personal things like paying school fees, paying your house rent and things like that. Because what happens is that the capital for the business ends up being depleted over time. And, it doesn't allow the business to grow. So I'll just encourage everybody, as difficult as it may be, sometimes please try and separate your personal finance from your business finance. Make sure that they're different. Make sure that anybody who's paying you for your business pays straight into the corporate account. And make sure that when you have needs, as much as possible, please do not tap into the business account so that business can grow and you can then have something stored up for the future. The other thing that I will talk about is, corporate governance. There's something we say in Nigeria, we say one-man business. And the reason why we say one-man business is because the business is around just an individual. And it's just not ideal. It's not ideal because when that person is not there, things don't work the way they should work. So what am I saying? I'm saying that in your business, from the get-go, please establish a set of rules, a set of policies, a set of practices, a set of processes that yourself and the people who work with you will follow. So whether you are there or you are not there, there is consistency in the way the business is operated. And there's separation from the promoter or the entrepreneur. That encourages anyone who is lending to say that this is a well-run business. This is a business that has processes. This is a business that has people who know what they're doing. So it's very important that we start to think along this way, even though we're still thinking of what to do or we are just starting out in business. Again, for a lot of entrepreneurs, when you ask them, what's your bottom line? What's your, what's your operating profit? How much profit are you making? Some people have to think twice. Some people will say, let me get back to you. But it really shouldn't be so. You should keep your eye on the numbers. And then for some people, they watch only the revenue. So they see, my turnover is, let me say, 10 million per annum or something like that. Taking into account also the operating expenses and the profit afterwards. So you have to keep your eyes on the numbers, whether you're just starting out or you are young in business or you're an experienced business owner. Please keep your eyes on numbers. It's very, very, very important. And over and above that, document your financial, engagement. So keep your books. And these days, there are actually apps and there are, technology platforms that can help you, simple ones that can help you, document your revenue, document your costs. It will throw up your profit. It will throw up your cash flow. It will help you to maintain a semblance of financial statement so that you can see how your business is performing month on month. You can also demonstrate to anyone who, may be wanting to invest in you that your books are being kept and they are also books that you are, that are healthy. Shows the financial health of the business. So, I know a platform is called OZE and it's very intuitive. You can easily use it. Please go out and look for it. They support SMEs and, they also provide funding for SMEs as well. OZE. It's a relatively new platform, but they provide SMEs with lending and they help you with documenting your financial statements in a very simple and easy manner. So I mentioned, on the right-hand side of the slide, you can see some images of some logos of some companies. I forgot to mention JICA. JICA is the Japanese International Cooperation Agency. They're also very active in Nigeria, and please feel free to look them up. They also provide grants in some instances and technical assistance in some other instances. So now going on to what I would call young businesses. These are businesses that are, maybe 3 years, 18 months, under 5 years. Now, we all know, it's commonly said that most businesses fail in the first 5 years. Some people put that figure at 20%. Some people say it's as high as 50%, that up to 50% businesses fail in the first 5 years. So we're here today to learn what we must do to make sure that our own businesses exceed the first 5 years and go on, to become Fortune 100 companies in the future by the grace of God. Again, talking about the types of funding that are available for young-ish businesses. In this type of business, you have established your business. There is a proof of concept that this is a viable business. You have started generating revenue. You are making profit already. So the difference between this business and those who are still in the ideation phase is that this business is proven, it is live, it is real. We can feel it, we can touch it, we can see the profit. And in terms of what is available, debt financing, which I didn't mention earlier, is available for businesses like yours, the new and the young businesses. Why? Because whoever is lending, you can see that there's a cash flow, there is track record, they can see what you have done, and they will take their decision based on what you present to them. Remember, when I was talking about new businesses, I didn't mention debt financing. I mentioned equity, I mentioned grants, I mentioned savings, I mentioned bilateral agencies, angel investors, and things like that. And the reason why is because when you are starting your business, I'm going back to the first phase now. Maybe I should just go back so that you follow me. Just bear with me. And the reason why, I just want to emphasize something on this slide. Here, I deliberately didn't talk about debt financing because you are just in the ideation phase, or maybe you just started and you just realized that this is a viable business. Now, you don't want to be dealing with having the additional pressure of paying out interest every month or every quarter at this phase, because you are just growing your business. You are just, entering the market. You are just trying to, just find your feet, as it were. So debt financing is not advisable in this phase. So as I mentioned, focus on the savings that you've been able to gather, equity investors who will take an equity risk with you, grants and technical assistance from bilateral agencies, government, and other private institutions. Now, going back to the second type of business, which is the young business, here you can actually access debt financing. This is, from lenders, whether it's a bank, it's a finance house, or any other kind of lender. So here, because you already know how much cash flow, you can predict certain things. You can prepare a budget, and your bankers also can see it. So in this type of instance, you can actually go for debt financing. And if you choose to, you can also do equity. If you are comfortable and you want to, give up some part of some shares in your company, you can also do equity at this stage. The other thing that I wanted to mention is these days people use crowdfunding for different initiatives. So if you have an initiative that is a social good, you might actually want to use crowdfunding to raise funds, and those who are interested will donate small amounts for you to meet your business objective. But usually people don't use crowdfunding for personal businesses. So there has to be some kind of good that you are doing to the society for people to want to contribute for that purpose. But crowdfunding works these days, and it's also an avenue that you can use to raise capital for your idea. And then the very popular one that I know is GoFundMe, GoFundMe, GoFundMe. If you go on to GoFundMe, you can raise capital for your causes, your initiatives. Bootstrapping is something we've already discussed. This is using your own personal finance to fund your business. And then, under debt financing, I will speak a bit more in terms of the institutions or the sources where you can actually get money from financial institutions. I will start by talking about Bank of Industry. Bank of Industry, we provide long-term financing to MSMEs and also large enterprises across various sectors in Nigeria. And the reason why I put Bank of Industry first is because we are the best in the market. We give you concessionary financing, we give you single-digit financing in most instances, and we give you longer tenured loans so that you find the repayment comfortable and easy. CBN also has some funds that are targeted at MSMEs, and those are also available on their website. I know people who have accessed it, so these things are actually operational. And there's some commercial banks who are now talking about collateral-free loans. And the reason why I mentioned this is because a lot of the times the issues that MSMEs have or young businesses have is that they cannot provide the collateral that the banks or the lending institutions are needing. So I guess in recognition of that gap in the market, some commercial banks or DMBs, as we call them, deposit money banks, have also created products that are targeted at MSMEs who need funding, who have good businesses, but who don't have collateral. So I know that Standard Chartered has a smart business loan, so you can access, I believe, up to 20 million naira without collateral. But obviously, the terms and the conditions is really, you would have to work with the terms and conditions. I also know that Stanbic has a collateral-free loan for SMEs as well. So please feel free to go and look, for this particular loan product and see if they meet your needs, and then you can engage. There are also industry-focused funds that, they're targeted at various interventions. This type of funds are usually from either the multilateral or the bilateral agencies, like what I mentioned, JICA, USA, GIZ, that's the German one. There's a lot of agriculture-focused funds, there are gender-focused funds, there are technology-focused funds that basically want to impact people or entrepreneurs in a particular space. At Bank of Industry, for instance, we have a new fund, which is a technology fund, which is targeted at MSMEs. But because we use intermediaries to achieve some of our aims, we basically give those who have digital lending platforms monies at 9% for them to lend to other businesses. So I will talk some more about what we do at Bank of Industry and some of our products. But what I would just advise you to do is look for institutions that are, based on what the information I've given already, that have initiatives in the sector in which you are already engaging or in the sector in which you want to engage. And I'm sure you will come across some of these targeted funds that are designed to help MSMEs. In terms of new businesses, you have been in the market. What you want to do is to increase your market share from a business strategy perspective. You are in the market, you just want to increase your market share. You want to make sure that you penetrate the market more and increase your market share. And how can you do this? There are many different ways of doing this. You can either, for a short period, a limited period of time, make your products cheaper than the rest of the market. So, for instance, if sanitary towels are being sold at, let me just say, 200 naira, and that's what you're producing, you can actually bring your own down to 180. You will attract some people who are cost sensitive. Another way that you can also gain market share is to make sure that your products you can actually give your products free of charge. You can give small samples to people so that they can taste if it's something that can be consumed, or they can test it and see how it feels. And then if it's something that they like, they will definitely go back and look for that product. So they can give you free samples. And a lot of subscription platforms do that. The Netflixes of this world, they will give you 1 month free, and you can watch anything you like for 1 month. And after that, they know that, they believe that you'd have been so engaged or so hooked that you now have to pay for the subscription. So there are many different ways of achieving market penetration when you're trying to gain market share. You can use a cost approach where your costs are, you make sure that your products are priced slightly below market. Over time, as people are knowing you and you're gaining traction, you can increase the price back in par with market. So you can do it for a limited period of time, and so that you can gain market share. Another way you can do that is to give free samples or free services or free products, so that people can test your product, and as they like it, they will come back for it. And, as I mentioned, you can also give free subscriptions. It depends on the type of good or service that you are, providing. So in terms of what lenders are looking for and financial hygiene, it's pretty much the same thing. So I talked earlier about the 5 C's of credit. I'm going to go over it again because I realize that some people may have just joined. So I'll repeat myself. And I think that repetition is also good so that it sticks. So in banking, there's something we call the 5 C's of credit: character, capacity, collateral, capital, and the conditions. And basically, these are things that anybody who is going to lend you money will want to see. So these are things that we as entrepreneurs need to be aware of. So character is very important, and this speaks to your track record in repaying and your credit history in repaying loans. And the banking system is becoming more and more integrated now, such that anyone who is owing one bank, literally all the banks know. Now, in terms of capacity, it really speaks to your capacity, your ability, the ability of your business to repay the loans that have been given to you. Collateral, this is required to secure the lending that they will give to you. So as much as possible, I would encourage everybody, no matter how little you think the money you have on you is, try and invest in things that you can go on to use in the future as collateral. And in terms of, you also have to demonstrate that you are committed to that project, and that's what is referred to as capital. You have to have equity, and you have to have skin in the game. And the conditions, as I mentioned earlier, is the conditions that are tied to the loan, the purpose of the loan, how much it is, when you repay, the tenor, if there's a moratorium in terms of some time where you don't have to pay, and then you then resume your payment, and the interest rates. So from a financial hygiene perspective, the one thing that I've added in addition to what we mentioned earlier about corporate governance, about having your books, and you're preparing your financial statements, is just making sure that you clearly and you rigorously identify the risks that your business faces. Who are your competitors? What are the policies affecting your business? What government policy is affecting your business or the business that you are thinking of venturing into? And you have to find a way of mitigating those risks. And the other thing also is, as your business grows, nobody can do everything by themselves. You need to begin to identify collaborative partners who you can leverage their strengths to be able to do business better. I also talked about corporate governance earlier. And then, as a business matures, you not only need to keep your books, you need to, prepare audits and financial statements, so that people are comfortable with your company. And because when lenders are going to give out money, they will want to verify your company's financial records. And this is very important. So now the last category of people here today are people who are already in business. They've been in business for more than 5 years. They've seen the highs, the lows. They've seen different economic cycles, the boom period, the bust period, and they've survived. They've gone through all of that. And here again, we're just going to speak to, the types of funding available. What you will notice is that the longer you have been in business, the more you have in terms of the different sources of funding. So, for those who are starting out, you most likely will not have anybody wanting to take a debt, credit risk on you because they can't see the business just yet. When you go into and you started producing, you're a young business, people can see your cash flows, you will have access to debt financing. And then over time, as your business continues to grow, there are even more opportunities in terms of accessing financing. And obviously, as a business grows, there will be profit. And so you can continue to reinvest your retained earnings. So that's one source that you can use to finance your business when you're a mature business. Also, private equity investors, are more comfortable with businesses that they can see that, they have track record, they have grown and, or they're growing, or they have huge potential to grow. The same thing with venture capital funds. And what they bring to the table is private equity. They bring equity and they invest in your company, and in return, obviously, for a stake in that company. Of course, debt financing is always available over and above everything that we mentioned. You can also access financing by getting into a merger situation, So if you want to, another way that you can get access financing for your business is an M&A, and this is a combination of businesses where they come together with their strengths and they become a bigger business. So it's like two small businesses coming together and they become bigger, or a big one and a small one. But ultimately, the outcome of that merger and acquisition is something that will be bigger than the two of them remaining separate. So there are many private equity firms out there. I just picked a few, and there are very many out there. So there's Verod, there's ABN Quest, there's Afric Invest, there's African Capital Alliance, to mention a few. In terms of debt financing, I already mentioned that Bank of Industry does that very well. There's CBN funds and the commercial banks also who are available to provide debt financing. Now, in terms of business strategy, when you are a well-established business, what you need to do as a business is to make sure that you are leveraging your strengths, what we call core competencies in strategy. So what are the things that your business does well? Those are things that you should use to compete when you have established yourself in business. So focus on your strengths, focus on your core competencies, focus on the things that you do well. For some people, it's their branding. For some people, it's the cost structure. They're able to organize themselves in a way that they have a low cost. For example, Walmart in the US, one of the things that they pride themselves is that their goods are cheap, that you really can't get it better elsewhere. So they have a cost structure that allows them to provide goods at a relatively cheaper rate than what their competitors are doing. So that's one of their sources of competitive advantage. So as you grow in business, you need to identify what you do really well and use that to your own advantage. Now, from a financial hygiene and what lenders are looking for, I've gone over the 5 C's. I won't go over it again. But the one thing I wanted to mention is that in an M&A situation, in a merger and acquisition situation, there's certain things that whoever wants to acquire, or whoever wants to provide additional capital, to take over that business, there's certain things they will look out for. And so if you are thinking of, merging with a bigger company or a company that is about the same size to create a bigger one, there's certain things that those you are merging with, or those who want to acquire you, will be looking out for. They'll be looking for a culture fit between your company and their own company. So what is required of you as an entrepreneur is to make sure that you have a strong culture that allows your employees to achieve the objectives of the institution. And the other thing that, those who want to acquire a company will be looking out for is the revenue and the cost synergies. Where can they save costs, and what incremental revenue will your business bring to them? So again, you just want to make sure that your financials are good. And the last thing I'll talk about under, what an M&A situation, what an M&A partner will be looking for is your managerial team. Most times when M&As take place, people are looking for the leadership. They're examining, they're analyzing the leadership of the companies that they want to acquire, because ultimately those people will then go on to be part of the new company and add value. So they want to make sure that, these are people who are strong. And so again, in setting up your team, is make sure that the people who manage your business are people that have that share the value or the vision for the business, and also they are people that are technically sound and can do the business. So what I'm saying, in other words, is that in hiring people, look for the best, and this will help you ultimately in the future because they will deliver value for you. In terms of financial hygiene, the same things that we've talked about: risk management, constantly and rigorously identify your risks and mitigate them. Strong corporate governance, make sure that you have in place processes, procedures, and things that make sure that things run smoothly. Make sure that your financial books are kept, they're well kept, that audits take place, and make sure that your value proposition is clear and that you are leveraging your competitive advantage to compete. So at this phase, I just want to pause a bit and see if there are any questions before I go into the BOI segment. Or should I continue?
Please continue.
Okay, perfect. So I'm going to speak very briefly about BOI. BOI was established about 2 years ago, where our vision is to become Africa's leading development finance institution operating under global best practices. And our mission is really to transform Nigeria's industrial sector by providing financial and business support services. I deliberately mentioned that financial and business support services. That's because we realized that it was not enough at BOI. Realized that it was not enough to just provide, money for people. We realized that there was a gap, particularly in the MSME space, where the technical skills were lacking. So we bridged that gap by providing business support to MSMEs, and I'll talk some more about that in the following slides. Now, because we're a government agency where the sectors that we focus on are determined by the Nigerian Industrial Revolution Plan and the Economic Growth and Recovery Plan. And, so we have what we call our core sectors and our emerging sectors. So agro and food processing are areas in which we play in strongly: oil and gas, the midstream and the downstream segments of oil and gas, solid minerals, healthcare and petrochemicals, engineering and technology, creative industries. Here we do entertainment, we do fashion, we do beauty products, and renewable energy is something that we also are beginning to, it's an area we play in, but we call it an emerging sector because it's nascent globally. Education is something we also play in, supply chain and logistics as well. And we also had some some funds that were dedicated to trade. In terms of how we operate, how we do what we do, I will just speak around the things that drive us, how we operate, and things that we want to achieve. So, because we're a development finance institution, we want to make sure that we provide interest rates that help your business to grow, and that's what we mean when we say we provide concessionary interest rates. And our interest rates are lower than what you can get in the market, much, much lower. They are relative to other providers of lending, it's low. And we also want to make sure that we constantly are scanning the market and we're providing solutions to problems or challenges that people have. And so we, constantly provide innovative financing solutions. We have an MSME focus because we know that MSMEs actually create the most jobs in Nigeria. We have a women and youth women and youth empowerment programs because women and youth, constitute majority of our population demography. And we also want to make sure that we are facilitating exportation and export earnings. We want to create forward and backward linkages just so that we drive economic growth. We also want to make sure in BOI that we are promoting the use of local raw materials and local content development. We also want to make sure that we are creating jobs and we're creating value. And also we want to make sure that the projects that we invest in are environmentally friendly and sustainable projects. In terms of our business model, we have primarily three divisions: the micro enterprise division, the SME division, and the large enterprise division. What I just want to take away from this slide is that if you are borrowing up to 10 million naira, you are a micro enterprise in the eyes of BOI. If you are borrowing anywhere from 10 million naira up to a billion, you are an SME, small and medium enterprise. And if what you are borrowing is over a billion naira, then you are a large enterprise in BOI. Now, recall that I mentioned earlier that we don't just provide financing, we actually provide financing and advisory support. How we do this is we use what we call business development service providers. These are primarily SME consultants who work with the bank. And what they do is they work with the SME. They identify SMEs who need funding. They help them in preparing their business plan. They handhold them. They help them with their documentation. They submit it to BOI. And when that business is appraised, or rather that project is appraised and it is found to be viable and we get a positive loan approval, BOI will actually pay that BDSP, not the SME. So I'm going to repeat what I just said. In bridging the gap, the technical capacity of some MSMEs, BOI has appointed some people we call BDSPs to provide that technical know-how, that business savvy in developing business plans, in conducting research analysis. And when the business, the loan or the project has been approved by BOI, BOI will be the one to pay the BDSP, not the SME. Now, what we just require of the SMEs is that they pay the BDSP a token fee, usually no more than 250,000 maximum, so that you demonstrate your own commitment to the project. But when the loan has been successfully approved, the Bank of Industry will actually pay the SME consultant. So that way, we've been able to help people who ordinarily would not have accessed funding from BOI to actually access funding from us. People who perhaps didn't have the skill or perhaps didn't have the money to pay for the service, those people can now access funds from BOI because of this initiative. We have about 330 of them. They are spread all across Nigeria. And I can give you more information after the session on how you can reach out to any one of these BDSPs. In terms of how we are spread out, we have about 29 state offices across the country. This slide, I will leave it with our organizer so you can look at it. It's also available on our website. So we're all over Nigeria in case you're joining from outside Lagos. So I also wanted to use this opportunity to just talk about some key facts about BOI. The first thing is that you do not need to know anybody in BOI to access funding. The second thing is that you also do not need to pay anybody in BOI to access funding. Your processing will not take a year. We're automating our processes and things are a lot faster now. And BOI supports industries, various industries and manufacturing businesses. As I mentioned earlier, I shared the focus sectors earlier. Micro enterprises and small businesses can access funding. You can access 2 million naira from BOI. You can access 3 million naira from BOI. So we don't attend only to large businesses, we attend to the whole value chain from micro enterprises to SMEs to large enterprises. And also BOI supports startups. So long as the business plan is viable from our analysis, it will support a new business, a startup. Now, in terms of the general loan application requirements, I'm sure by now you are asking yourself, what do I need to apply to BOI? Most of the things that you need are basic things. And I want to believe that for those who are in businesses, you already have this in place. So you need your certificate of incorporation, you need your MEMAT, Memorandum and Articles of Association. Obviously, you need a business plan that will cover, the type of business that you want to do, the people who will run the business and things like that. I don't want to go into too much detail on this slide. We need to see your financials. We need to see details of your directors. If you have outstanding liabilities, we'd like to know what they are. And, then we will be asking you for the type of collateral that you want to provide. And there are very different types of collateral that are acceptable to us. For those who are micro enterprises, that is, for those who are borrowing up to 10 million, the bank actually accepts two external guarantors as collateral. So the bank will not ask you for cash or anything like that. All you need to do is provide two external guarantors to your business, meaning that they're not directors. These are people who believe in your business plan, who are willing to guarantee you, and you can get up to 10 million naira from BOI. And then the other type of collateral that we find acceptable are bank guarantees. And then we also do legal mortgages. So if you have landed property or buildings, we would also accept that. We also accept all asset debentures, whereby, we can combine your equipment, your plants, your machinery, everything together into a debenture, all asset debenture. Now, for legal mortgage, another thing that we do just to make access to funding easier for MSMEs is that we actually accept third-party legal mortgage, which means that you may not have a landed property, you may not have a house, but you have an uncle, you have, a brother or somebody who wants to support you, who has that landed property, and they're willing to pledge it to BOI for the duration of your loan. BOI actually accepts that for you to access funding as well. We do all this to make sure that we lower the entry barriers for people who need funding. Now, in terms of the type of loans that we provide primarily two types of funding or loans. We provide equipment or asset finance and working capital. BOI is Bank of Industry, so we want to promote manufacturing, we want to promote production, we want to promote industries. So as much as possible, we like to finance equipment, which will then turn around to produce goods. And where we see the need for working capital, we will also provide that in addition. But our forte, the primary reason why we exist is to finance industries. And so we like to focus in our area of strength, which is really equipment/asset financing. As I mentioned earlier, for loans that are up to 10 million naira, a personal guarantee from two people external to your business is all that is required. For anything above 10 million naira, we would either accept a bank guarantee, a legal mortgage, including third-party legal mortgages, or all asset debenture. Now, in terms of pricing, I mentioned earlier that our pricing is the best in the market. Our pricing ranges from anywhere from 5% to 10% per annum. At BOI, we have our own funds, which are on our balance sheet, and we also have third-party funds that we manage on behalf of various stakeholders. And some of those funds are available at 5%, and some of them 9%, and some of them 10%. Now, our primary lending rate is 10% per annum. And the good thing about BOI is because we're a development finance bank, we're not going to come to you 2 years down the line to say, oh, the market has changed. We are sorry, we have to review our interest rates upwards. We raise long-term money so that we can keep the interest rate stable over the duration of the loan. Now, when we give working capital, it's priced slightly higher. For SMEs, it's 12.5%, but if it's a large enterprise, it's at 14%. Those are people that are requiring up to over 1 billion naira. So in your first year, you would pay what we call the appraisal and the commitment fee, but those are one-off. They happen only once, in the lifetime of the loan. And then there's a monitoring fee, 0.0125%, which is paid on the outstanding loan balance at the end of every quarter. Now, we've talked a lot about, what are the sources of funding, who are the providers of the funding, what you should do to access this funding, how you should keep your books, financial hygiene. We've talked about business strategies. And, I'm sure that depending on the type of entrepreneur that you are, what category you belong, I'm sure that you must have started to think about what you need to do differently. For those who are just starting, you're probably thinking, oh, what are the opportunities that are available to me? For those who are in business already, you might be thinking, how can I diversify? So I went a step ahead. I was asked to talk about access to funding, but over and above that, I just wanted to, get us thinking. And I've added a few more slides to talk very briefly about what opportunities may be out there, just so that, we can begin to just challenge ourselves and, think differently, as it were. Now, in terms of, what you may be, what you may want to invest in, the first thing I would say, there's something called the Maslow's hierarchy of needs. And basically what that means is that at the bottom of the pyramid, there are two things that, if you see the circle, the red circle that, I highlighted, there are primary things that are basic to every human being. Those are physiological needs and those are safety needs. So first, people need to eat. People need to have clothes. People need to have shelter. Those are things that, before you talk about any other thing, are necessary, and they are things that they are needs. They are not wants. So when you are talking about business or investment opportunities, it makes a lot of sense to focus on those needs, because these are things that are not wants. People need them. And if you think about the population of Nigeria, 200 million plus people who need food, who need shelter, who need warmth, who need clothing, these are areas that we can actually invest in. So if you are thinking about what to do, I would ask that you look into some of these areas. So farming, agri-processing or food processing, apparels, wears, things that people can wear, because these are really basic needs for people. So if you are thinking about what to do, I'm just pointing you in the direction of the basic needs that human beings have. And maybe you might be able to provide a solution. Maybe for you, your opportunity might be low-cost housing. Maybe you have an idea, you have identified partners who can provide low-cost housing to people in Nigeria. And you can scale it up to Africa as your business grows. For some other person, it might be, just food. For some other person, it might be making clothes that are durable. Whatever it is, focus on the basic needs because these are things that people can't do without. People always have to wear clothes. People always have to eat. People need a place to shelter. So that's one investment opportunity. The other one I wanted to talk about is what we call, or what is popularly called now, the circular economy. Now, the circular economy, in other words, is just recycling. Let me put it that way. And if you look at the diagram that you can see that it starts with manufacturing, then it goes on to consumption and use, then it goes on to recycling, and then back to manufacturing. Now, how does this apply to you and I, and what are the opportunities available here? So you can recycle, you can collect plastics and gather them and recycle them. All of the water that we use, they're made from the bottles are made from plastics, and so many other things, that are made from plastic. So instead of throwing away the plastics that you have used, why don't you gather it? Maybe, there are areas in your neighborhood where people just just throw away things. Why don't you create a recycling, platform for people to bring their waste to you, so that you can then, clean it, maybe turn it into pellets, sell it back to some of the companies that need it, both locally and offshore. So that's an opportunity. Recycling is a big opportunity for those who may be interested in that space. And globally speaking, because we're talking about global warming and things like that, there's a lot of emphasis on, making sure that our environment is friendly and is sustainable. And so because of that, there are also funds that are available for people who are engaged in, recycling and taking care of the environment and just making sure that nothing goes to waste. So that's another opportunity that I wanted to share, with people, just in case, you have a passion in that space. You can set up something. And there's actually an initiative that is called Slum to School. And that initiative actually encourages small children in underprivileged areas to pick up, plastics, and then they go and give it to this company, and this company will in turn give them, credits that they can use to pay their school fees. So there are many different things out there that you can do in the recycling space. All you have to do is start. As Pastor Shokoya said, just start. When you start, you will begin to find that doors open up to you. So in closing, I have one more investment opportunity, and this really speaks to the macro. It speaks from the macro perspective. Now, for the first two things that I mentioned, where I was talking about, the basic needs of human beings and also the recycling space, these are what I would call micro. These are the individual level. Over and above what I've talked about here, what I would just like each and every one of us to go away with today is to just sit back and look at the challenges that are facing even you in your environment, maybe in your estate or even in your church. What are the issues that people are facing? And then look for a solution to provide to that challenge. And then you can then go on to monetize it. So now at the macro level, which is thinking from a big picture perspective, if you are looking for opportunities, I've tried to do an analysis, which is the sectoral breakdown of the Nigeria's GDP, and then also to juxtapose that to the fastest growing sectors in the Nigerian economy. But this requires a bit more analysis, because if you are trying to identify opportunities, you would have to look at different data sets. So you can look at the fastest growing sectors quarter on quarter over a period of time to see the sectors that are growing fast, and then you can invest in those sectors. Again, when you look at the sectoral distribution of Nigeria, you can see agriculture is up there. It also tallies or aligns with the fact that food is a basic need for people, and so it makes sense that agriculture contributes a significant portion of our GDP. So the other, in terms of the things that I just want to pick out, technology is fast growing. Nigerian technology entrepreneurs are, beginning to gain global attention. Companies are coming to Nigeria to invest in our technology companies. Renewable energy, I mentioned, on the previous slide, is also something that is gaining attention, and there's a lot of funds that are available for that purpose. Manufacturing contributes a large proportion of our GDP, so it also makes sense to look into that. Construction as well, supply chain and logistics, very important because people need to get goods and services, and this sector has been helped by the pandemic, whereby people could not move around, and so the motorbikes and things like that were things that were able to deliver goods and services. So it's a growing sector. As long as e-commerce is growing, that sector will continue to grow as well. So on that note, I will close the session. So in summary, we've talked about the fact that we're all in different stages in terms of our business growth or the growth of our businesses. So it doesn't matter what stage you are. What's important is that the information that you have gotten today, that you actually take action with it and you use it, to get to the next level. We've talked about the different types of funding, what is suitable at what stage. When you are just starting out, you are better off with equity, you are better off with grants, you are better off with angel investors or crowdfunding or your own savings. As you begin to grow, then you can begin to look for debt financing, whereby you can get money from a bank, a finance house, and you pay them interest over a period of time. And we talked about the various sources of funding, the fact that some people will, the incubators and accelerators may not give you cash, but they will pay for services, they'll give you training, they'll give you access to platforms that ultimately will translate to profit in the future for your business. And we talked about the different types of strategies that are important at different stages. When you're just starting out, what you want to know or what you want to do is to make sure that you are very clear on the problem that you're solving, have a clear target market, and have your value proposition for that market. And that value proposition must be something that makes sense to them, that is meaningful to them. It mustn't be something that you think will be useful. It has to be something that is a key buyer value for the people that you are targeting, so that it can be effective. And then in penetrating the market and gaining market share, we talked about the different things you can do to gain market share, like lowering your cost for a limited period of time, giving out free samples, free services, so that people know your products and then they begin to demand for it by themselves. And we talked about the fact that, the more established your business is, the more you should focus on what is your core competencies, the things that you do well. And we also talked about the fact that, from a financial hygiene perspective, there's certain things that lenders would like to see, the separation of the individual from the business, the fact that there's strong corporate governance, the fact that the financial statements are prepared, the fact that they're audited, and things like that. So in closing, what I would just say to you is find the challenge you want to solve in an area that you are passionate about. And I will leave you with this quote. Winners they don't do different things, but they do things differently. So I'm charging everyone who's listening, take action today. Go ahead, forge ahead, just start, document that business plan, do something different today. Take the information that you've been given, do your own research, and I will see you at the top. Thank you very much.
Oh, wow. Thank you. Thank you very much, Sister Ronke. Can you hear me?
Yes, I can.
Yes. Awesome presentation. Thank you so, so much. It is direct, simple, and very practical. Oh, wow. You have bowled us all over. Thank you. Thank you so much. I personally have been blessed, and I know that all the participants that are here today listening to you have also been thoroughly blessed. And I came away with several learning points. I will highlight a few. And to the participants now, if you have not taken notes, here is an opportunity to write a few summarized points. Ronke made so many great points. In fact, it would be difficult for me to pinpoint which particular points I should be highlighting, but I'll just try and make an attempt. But what really, really resonated with me are the points relating to the business stages. A lot of us are at the startup and the pre-startup stage. Okay, so Ronke talked about the stages, ideation and startups, new businesses, as well as established businesses. And she also talked about types of funding. She mentioned angel investing, equity investors, debt financing. She talked about crowdfunding. And she gave an example of the angel investors we have. And she talked about Lagos Angel Network. Great. I mean, the angel investing started from the Lagos Angel Network. There's also Rising Tide Africa, if you're also looking for an angel investor. Ronke talked about sources of funding, and she talked about the incubators and talked about accelerators, okay? And that is a good source of funding. She talked about private equity and venture capital investors. Now, business strategies, looking for funding. What are your business strategies? And she said to us that we should leverage on our core competence. We should leverage on our core competence. What is your strength? Again, I repeat, what is your strength? And what can you bring to the table? I think these are very pertinent questions. And she now told us about financial hygiene. The way, as an individual, you take care of your personal hygiene, you also should take care of your financial hygiene. All right? What are your financials looking like? Are your figures adding up? Are you tracking? Are you monitoring? And she talked about corporate governance, which is very, very important, especially for our micro, small, and medium enterprises. Ronke went further to tell us about BOI, her employers, what BOI does, the fact that they give concessionary interest rates, as well as the products that they offer. Thank you very much for this, Ronke. Very awesome. Now, we have heard from the speaker, Ronke. Now it is time for us to hear from the attendees. And the way we have put it together is that we had gotten the attendees to put together the questions that they would like Ronke to answer. And based on these questions, we have put together some questions that we're going to give out to Ronke. And the good thing is Ronke incorporated most of these questions. In fact, almost all the questions that you guys asked, she incorporated in her presentation. Thank you, Ronke. You've done a wonderful job. So we will have less than 20 minutes of Q&A, and then we will be asking you a few more questions. So the first question I'd like to ask Ronke is, you have told us the role of BOI, okay? So what are, because we know that there are funding for different segments. I know that there's funding for the creative industry, funding for the MSME, you know. So what are other types of funding that BOI has for?
Thank you very much. Can you hear me?
Yes, I can hear you.
Awesome. So on the screen here, basically I've highlighted, what we call our core sectors and our emerging sectors. But the beauty about BOI and the fact that we're a development finance institution is that the reason why we live and breathe and do everything we do is because of MSMEs and because we want to promote economic development. And so because of that, even if your sector is not here, if what you want us to do for you is to provide equipment finance, we will do it. So let me give you an instance. So for instance, you can't see real estate here. But if you're producing bricks, in one of the components for real estate, and you need to buy, some kind of machine that produces bricks, we will still buy it for you. So whilst we have some sector-focused funds, that are targeted at different sectors, everybody is welcome to BOI. I think that's a summary of what I'm saying. So long as we're buying new equipment, and that equipment you're using to produce something.
Okay. Sorry, Ronke. You can hear me, right?
Yes, now I can. I couldn't hear you before.
Yes, sorry about that. A bit of technical issues. All right. So thank you very much for the response to that question. All right. So another question that we would like you to help us answer, and it's coming from our participants, is saying, why does a business with strong revenue track record and financial history of over 15 years still find it difficult to raise working capital at a reasonable interest rate?
That's an interesting question. It's interesting for many different reasons. I'm not sure what the specific, circumstances of this particular company is. It may be that, even though, from your personal perspective, you think the numbers are great, maybe the lenders don't, really see it that way. And they may consider your business to be high risk. And so they will price the funding equivalent in a commensurate manner to the risks that they are seeing. And so, it might actually, come to you at a high cost. But that is why BOI and other development finance institutions exist. We have realized that there's a gap in the market, and that's the gap that we're trying to fill. And so that's why even when we on-lend, which means that we use partners to intervene in different sectors, we always insist that there's a cap to how much they can charge the ultimate SMEs and MSMEs who will use the funds, because we want to make sure that the money gets to you at a price that allows you to continue to reinvest in your business, that your interest payments don't harm the continuity or the sustainability of your business. So, if it comes to BOI, as I mentioned, our working capital at the highest end is 14%, at the lower end is actually 12.5%. And right now, because we've had COVID interventions, is actually 10%, and our lending right now is actually 8%.
Okay, awesome. So you actually have funding for almost all the sectors in the Nigerian economy, because most of the questions I see here has to do with funding startups. I mean, someone who has an ultra-modern multimedia studio, someone who is manufacturing, or someone who wants to do cashew nut exports, someone who wants to do a quarry business, or someone who is in the education sector. So
those are all businesses that we'll be happy to engage with.
Wonderful, wonderful. So I hope our participants are listening to Ronke, that Bank of Industry has the capacity to finance this segment. And thank you again, because I note that you have actually told us the process of assessing these loans, and that you do not need to know anyone in Bank of Industry to be able. Yes, so that is so awesome. So we have some time, so I'll probably ask 2 more questions. Apologies, You can't see me, there's a bit of a glitch there. All right, so you did mention that if you're a micro enterprise, you can get less than 10 million naira. Then a small and medium, you can get between 10 million naira and 1 billion naira. Okay, so this is, and I need a startup of about 50 million. I can get that from Bank of Industry as a small enterprise, right?
Okay, I didn't, because you went now for a bit. I'm not sure I heard you well, but I'm going to try and answer the question, and then you can tell me if my understanding was not correct. So you said if you are just starting out, you're a startup and you need 50 million, can you get it from BOI?
Yes.
Was that the question?
Yes.
Yeah, so yes, you can. So as I mentioned during the presentation, we do finance startups, and so you can get money even if you're just starting out in business. But you would then have to provide the collateral that is commensurate to the amount. So if what you're asking for is less than or up to 10 million, you have to provide 2 external guarantors. But if it's up to 50 million, then you would need to provide, some kind of collateral. So whether it's a legal mortgage or a bank guarantee or something like that.
All right. Thank you so much. There's a question about education. All right. They've been asking that repeatedly, and it will appear that a lot of our people want to go into that space. Do you have any word to say about education? I hear you about BOI's capacity, but what is there anything you want to tell us more about the educational sector? Recall that United Nations has some SDGs, some of their social development goals, and education is one of them. So I would want to believe that Bank of Industry is also working in meeting those United Nations standard development goals, right?
Yes, indeed. We're a forward-looking institution. And so, education is one of the sectors that we focus on. And this is highlighted as an emerging sector here. What we like to do in that space primarily is vocation schools that, give people the trainings that they require to then go on to produce things and contribute to industry and economic development. But even over and above the vocational schools, we also, would look at regular schools and help them with, whatever equipment that they require.
All right. Thank you very much for that. And then my final question to you will be, how do you support entrepreneurs to raise international funding? We have quite a number of questions regarding external funding in USD, euros, or pound sterling.
Very interesting question. Here's my answer to that. BOI is a Nigerian bank. We're a development finance institution in Nigeria for Nigerians. So we provide local currency and foreign currency as the business case justifies it. But we don't help people to raise money internationally. So, as your business grows and you desire to raise money internationally, then, you'd have to do that on your own. Was that the question or the?
Yes, that was the question. Thank you so much. All right. So that's outside your scope.
Yes, indeed.
All right. Thank you so much.
You're welcome.
Our goal today really was to help our attendees gain insight and knowledge from you so that they can make their entrepreneurship journey easy. All right. So we are almost out of time. And I'll just want you in 30 seconds to tell us what is the final piece of advice you would like to give to all the participants on this call today.
Thank you very much for this parting shot. Here's my take. Seek information and ask. There's something that I live by. If you don't ask, you don't get. So ask people, look for information, and then take action. Those will be my passing shots. We've heard a lot of information today. Do your own research, begin to engage people. And from my personal experience, when you start to engage, doors begin to open. And especially as children of God, God is already by your side, waiting for you to take that first step. So I would say to everybody, run with the information you've gotten today, seek more information, and take the next step. Thank you.
All right.